Coinbase just launched their base chain, and it is rapidly catching up to other major layer 1 and layer 2s, which means investment opportunities will be plentiful. In this video, I'm going to briefly cover what the base chain is, how to bridge over to it, and why you should be paying attention to it right now. I'm going to cover in depth what BaseSwap is, why I'm dollar cost averaging into it right now, the risks, and my strategy for how I'm generating a good amount of passive income on the platform. So before I start, I do have to let you know that this video is not meant to be financial advice. Please talk to your financial advisor before making any investment decisions. This video is for your education and entertainment purposes only. So what is BaseChain? BaseChain is a layer 2 blockchain built on top of Optimism by the major exchange Coinbase. Now, I've been really diving into Base and the whole ecosystem because, to be honest, Coinbase and their products and their exchange and their Coinbase wallet, they offer the simplest / most popular on-ramp for investors to get into crypto in the United States. So I think it makes sense to assume that this base chain is going to attract a fuck ton of retail investors. And similar to when the Binance Smart Chain launched, there will be no shortage of 10, 20, 30, 40, 50 to 100x investment opportunities. So right now, Coinbase will allow you to withdraw tokens from the Ethereum mainnet, Polygon, and now Base, and that's huge. It's also important to note that all of the transactions that happen on the base chain are verified by a single sequencer node owned and operated by Coinbase. So it is extremely centralized. That also means, and I quote this in their own words, "We may suspend or terminate your access and use of the services at our sole discretion at any time without notice to you." So that means that they can control who uses the base chain, aka that means if you're using it and they don't like what you're doing, they can blacklist your wallet and they can stop you from using the bridge. That part's not really that big an issue because there are other third-party bridges that allow you to bridge back on, which I'll show you later on in the video. However, based on our docs, they are planning to decentralize. So it may be a good idea to bridge over to Base just to play around with it so you can qualify for an airdrop if they do one. And I do think they're going to do one because the only way to decentralize something is to have governance tokens that allow people to vote, etc., etc. So in their words, it says, Base is incubated within Coinbase and plans to progressively decentralize in the years ahead. That sounds like token drop to me. So now let's start looking at some Base metrics and compare them to other layer 1s and 2s. So if we look on DeFi Llama, we'll see Base is number 12 in TVL. I wouldn't be surprised if they crack the top 10 here in the next few weeks or month. And as you can see, in the last month, all this red, they've increased 838,374%. And if you look at all these other protocols, the only other ones to have green, they appreciate it, single digits, just going down the whole chart, just single digits everywhere. That's saying a lot. And you guys got to keep in mind, we are in a bear market. Now, if we click on Base, we'll see they have a $185 million TVL at this current time. And if we look at the projects that are on Base, we'll see that BaseSwap, the project we're doing this video, is number 1 in terms of TVL. Now, this part is super, super important. Before I even get into why I'm interested in buying BaseSwap right now, I want to give you guys my methodology as to why I'm looking to invest into a decentralized exchange on Base versus any of the other projects that are there. And what I'm going to use to reference my point is the Coinbase Master Plan essay written by Brian Armstrong, the co-founder and CEO at Coinbase. So if you just go on Google and type in the Coinbase Secret Master Plan, you'll pull this up. So we're just going to go to this one part. So he outlines the phases of internet adoption versus, Web3 adoption. And it talks about how many people approximately were onboarded by these innovations. So the first phase is the protocol phase. So with the internet, that is TCP/IP, which is Transmission Control Protocol, Internet Protocol. It's the standard that the internet is built upon, right? After that, you had internet service providers and fiber optic cables being laid. Like, this is the tech stack. After that, and only after that, can you have browsers. Because in order to have a browser, you have to have internet service providers, and then you had to have a language that everyone agreed upon. Then after browsers came, you had actual applications. So the browsers are like the Mozilla Firefox, it's Internet Explorer, Safari. The applications are Facebook, Instagram, Google, etc. And you'll see that the first one had 1 million people onboarded, the second one approximately 10 million people, then 100 million people, then 1 billion people. So with crypto, it's kind of the same thing. The protocol is Bitcoin and Ethereum. The second phase was infrastructure and exchanges or decentralized exchanges. Hopefully you guys can see where I'm going with this now. And then secure storage. That onboarded 10 million people. After that, it was a consumer interface, user control wallet, 100 million people again. And then the last phase is the actual dApps built on top of this. So Base would fit into this category, the protocol category, and we have a few people onboarded. Now the next phase is infrastructure, decentralized exchanges so that people can buy and sell and have an on and off ramp. So now the next thing I want to go over with you guys is technical analysis. Let's look at this chart, because it doesn't matter how good or bad something is. You kind of want to make sure you know where you're getting in and out. Like your entries and your exits are really important. All right, so we're looking at the daily chart here. As you can see, I missed this pump because I was celebrating my 30th birthday party, and I was on a backpacking trip during this time and didn't have a signal. But you see it pumped, and it just pretty much took a shit here. I don't know where price is going to find support, but I'm willing to take the risk and hop in with some small bags. So this purple line is where I first bought. Motherfucker dropped 50% on me after that. And then I bought again at $2.50, and now we're hovering at $2.94. So we're getting pretty close to the release price at $1, which is not bad. And, I am pretty convicted that price is not going to stay here. So I'm just going to continually dollar cost average in. Obviously, you don't want to be buying up here. This, I feel like, is a good area to be dollar cost averaging in. And as this thing starts, if it goes down, I'm going to buy more. And as it starts going up, I'm just going to be taking profits at, even levels. At the very least, get my principal back, so that way I'm only playing with house money. It's very, very important that you have a plan to know when you're getting out before you get in. All right, now, so let's go to BaseSwap's docs and start to go through the important things. I definitely encourage you to read through this yourself, but I'll go over the important things, or at least the things that stuck out to me. So one thing I like about them is that they are a real yield protocol. And if you guys watch any of my previous videos, especially the ones on Radiant Capital, you know that I believe that real yield is going to be a big narrative in the next bull market. When I say real yield, I mean sharing revenue, however it makes its fees, with the users. And I'm not just talking about token inflation, right? I'm talking about sharing the actual revenue. All right. So it says BaseSwap introduces a groundbreaking concept allowing users to not only trade, but also benefit from the protocol generated revenue derived from fees. By utilizing its BSwap and BSX tokens, users are empowered to earn tangible cryptocurrencies produced directly by the protocol from swap fees. Next thing, we're going to talk about BaseX. Now, I don't think this feature is live yet because I don't see it on the website, but it looks like they're going to offer concentrated liquidity. All right. And, if you guys watched any of my other videos on concentrated liquidity, you'll know what it is. I won't cover that here. And, if you just go through these docs, it shows, all the stuff here, and it shows the fee. So this is kind of like Uniswap v3, even though v4 will be different. Be on the lookout for my video on Uniswap v4. It'll be dropping shortly after this one. But it has 4 tiers here: 1%, 0.25%, 0.045 and 0.008. Now let's dive into their tokenomics. So they have their BSwap token, and then they have their BSX and XBSX, and that's what I say is kind of giving me like GMX vibes. So if we look at the tokenomics here, they have the contract address here. You guys are more than welcome to check that out. They have the maximum supply at 10 million, the initial supply at 455,000, with the initial liquidity of 410,000. And then if we look at the token allocation, 85.45% was allocated towards liquidity incentives, like people like us who want to go and yield farm and provide liquidity. Initial mint 4.5, and then 2.5 of that locked. Treasury and marketing, and then team is 5% vested linearly over 2 years. Initial mint allocation, so the seed sales 50%, lock liquidity 45%, and treasury 4%. Okay, great. Next is the BSX token. This dual token model rewards long-term holders while discouraging transient farming. This enhancement solidifies BSwap's role, serving as the primary ecosystem token for BaseSwap and a counterpart to BSX. BaseSwap will grow increasingly rare as emissions will be confined to native BSwap and BSX firms exclusively. BSwap holders have the privilege of receiving fees, accruing tangible yields in USDC and ETH from the DEX. And I'll show you guys exactly how I'm doing that with BSX. So ticker BSX, maximum supply 10 million, initial supply 860K, initial liquidity 300K, initial price $1. All right, so let's talk about the utility of XBSX. Staking, earn basket of real yield. XBSX presents a distinct chance for users to acquire a collection of genuine liquid tokens. A single staker can earn the entire collection on one go. I like that it's single stake because that means you're not subject to impermanent loss risks. This collection is fueled by fees from our launchpad, existing and future products, partner incentives, and allocations from launchpad incentives. So now if we go to security, basically this team has built other dexes, so that gives me, that makes me feel a lot better. However, I do not see a smart contract audit here. I did ask the team in the Discord, but I haven't heard back yet, but I wouldn't be surprised they're getting an audit. Even though another thing is a lot of this code is probably forked, so that's another good thing. You're forking some code that was audited. So that's one thing to look out for. There's no smart contract audit yet, so there is a risk that the platform can be hacked or whatever. So definitely proceed with caution and only invest what you're willing to lose at the end of the day. So now let's check out their Twitter. Followers have been growing a lot, and I like what I'm seeing here. They're posting pretty actively, and they get a good amount of engagement. And what I like to see here is they've been partnering with some pretty legit projects. So Unidex, they partner with the YFX protocol, partner with Ethos Reserve, they partner with Basin, Overnight Finance, as well as the Squid Router, which is a pretty established project. They're partnering with some legit firms, and what's important about that is that while you don't see the team's picture on the website or anything like that, when they go to partner with these other legitimate projects, they do have to dox themselves with the project so the project trusts them. So that makes me feel good as well. So now let's cover how you can bridge over to Base, and we're gonna cover two options. So the first option is you can go over to base.org, hit bridge, and then you can use the native bridge. However, this one is going to take about 7 days to bridge over to Base, because the whole thing behind optimistic rollups is that they are optimistic that the transaction is going to go through. But you get 7 days for the validators, I think it is, to say, hey, that transaction isn't legit before it goes back. So that's why it takes so long. It's kind of like the opposite of a zero knowledge proof. And I have made videos on that if you want to check it out. So you can use this bridge, the native bridge, but like I said, it'll take 7 days. Or you can go back, hit ecosystem, scroll down here, hit bridge, and it'll show you all the bridges that'll allow you to bridge over to Base. I personally like to use the Stargate Finance bridge. You click it, you scroll down here, and it has Base. And the reason why I like to use this one is because it's built on layer 0, and I do believe that layer 0 is going to do an airdrop. I made a video on that. So the more you use the layer 0 smart contracts, the higher your chances are of getting an airdrop if they do one. But remember, they are VC backed, and those VCs got to make their money back for their investors. So they're not going public. What other way? All right, so finally we are on the site. So as you can see here, it's a simple UI, and this is where you access the docs down here. But they do also have cross-chain swaps, which is really, really cool. So you can go from all of these chains to any of these chains. And it looks like they're working on some other ones as well, but they have a few already live. Why isn't this not in the docs? I'm not sure. Another cool thing is if you click more and hit NFT, they have a NFT marketplace here. And last time I checked, there is no NFT marketplace on Base yet. So this is pretty cool. And that's just more market share that they can take and make the project more valuable. All right, so now that we're bridged and we know how things work, this is how you buy BaseSwap. Another thing to note, I bridge ETH. Ethereum is the gas token on Ethereum. So if you bridge USDC, you're still gonna have to bridge over some ETH, or you're not gonna have any gas to do anything on the network. So you swap here, that's pretty standard. Now let's talk about my yield farming strategy. So first, you click farms, and then you click live farms. It shows you all the farms here. So you got BSwap ETH, that's the one I'm in. I'm gonna show you guys how to do that. And these are all the farms with all the APRs. You click liquidity, you click add liquidity. And the cool thing I like about it is, like, let's say you only have ETH, but you want to provide liquidity for ETH and BSwap. If you hit max, it'll do the math and half it for you, like split it in half so you can do it and not have to make the swap yourself. And it does save a little bit on gas. So then you're going to get what's called a liquidity provider token. That's like your receipt. So just like back in the day, you used to go to the bank, give them your gold, they gave you the dollar, and you can use those dollars to buy things or invest into things like we're doing here. It's the same thing here. You give them your liquidity, they give you an LP token, and now you can take that LP token and stake it to gain additional yield. So you add liquidity here. Then you go back to live farms, and as you can see, this one's earning 951% APR. So you click detail, and I just got in this pool literally last night. It's probably been around 24 hours, and you got to keep in mind, BSwap dropped 50% already. I still earned $71. So you have to enable the contract first, and then you just stake it. It's pretty simple. So then I also bought BSX, which you can buy on the swap tab as well, just like the same way you buy BSwap. You go here and you click earn, and now you can stake your BSX single side stake to earn whatever asset you want. In this case, I want to earn wrapped Ethereum. So as you can see, I'm earning 133% APR in ETH. So far, I only bought $1,000 in BSX. So far I only earned $3. I just wanted to try it out first. But if this keeps up and I do more research and they keep building, I'm gonna buy more so I can, keep getting that real yield. So with that, I like to conclude this video. I am going to keep my eye on Base and Radix. Those are the two ecosystem I am just tunnel vision, laser focused on. Because I think it's going to offer a lot of opportunities this year, Q3, Q4. So let me know your feedback. Apply to join the Discord. Follow Know What Owls on Twitter. Other than that, let me know your feedback in the comments. Like, subscribe, and hey, I love every single one of you. Thank you for tuning in. I'll see you in the next video.